Hey, good evening, folks. How y'all doing? Kunal here, Bulls on Wall Street. I want to talk to you today about a trade that I really like doing, especially in earnings season, which is, after an earnings breakdown, and we typically like to play these things to the short side on the day of the earnings. After you get a dead cat bounce for a couple days, you'll get an extended move to the downside again. And we've been trading this BIDU quite often. And, initially we started it the first day off what we call like a PR earnings breakdown, which is one of our go-to setups that we trade every single day, which is, when stocks have bad earnings or something bad comes out and you get this gap, you're shorting the first bounce and the first bear flag you get, at the open. This would be like an opening range, what we call opening range breakdown, an ORB. So, as it's coming down here, you're shorting this for this type of flush. You can see you get these type of big stocks. A lot of people, retail traders, don't like trading them. But, one of the things that I love about these type of stocks is that even like a few hundred shares can get you really good profits on stocks like this that move. So, that's like your opening trade. And then later on, after that opening trade is done, typically what I'll be doing is I'll wait a couple days, and once you start to get a bounce and you kind of relieve some of this oversold condition and tension, once you get a bounce and you start to remake a top, you want to take this thing back to the downside and get back to these earnings lows. And so you can see, like, after BIDU had this intense drop, you kind of had this like dead cat bounce over the next few days, and you start building a top over here, in this 175 range. So, the stock is now stuck here, and so it's relieved this oversold condition, and now it's ready to be played to the downside. So, today when this thing opened up, we take a really simple setup in that, typically when a stock gaps down like this, I'm waiting for the first bounce to take this thing short. And so, after the gap down, you never want to chase this thing down, because like if you chase it down at say 169 or 170, this thing can pop up to 172, 173 in just a few minutes. And so you don't want to be stuck, with hundreds of shares, and then it pops $3-4. It can turn into a big loss. And so typically what I like to do is, wait for the first bounce into resistance, and then start leveling in my short into resistance, with the stop above. And then I've got a really nice reward to risk ratio, because, your first target will be down to, the old low of the day. And then the rest you can ride down and scale out along the way. That's a day trade. If you're a swing trader at this point, or a day trade and swing trader, you keep the last couple shares for Lotto, and, you can put a stop at the buy price. And then you just let this thing develop, and you get it, over the next few days down to this kind of 162, 163 level. But, awesome trading stock. We've been trading a couple times, and, you can see, like, when I'm trading these things, I don't load up thousands of shares. I had a couple hundred shares, and then I added 100 down over here for the flush. Nothing too big, but even small positions and in wide-ranging stocks can lead to some really nice profits. And this is one of my favorite things. Earnings season comes 4 times a year, and during that time, you get immense day trading opportunities on post earnings drift, which is the moves that come after the earnings and the earnings gap, and they tend to go in the direction of wherever that gap is for the next days to weeks to months. Earnings are the most powerful catalyst for individual stocks, and so it's something I'm always looking at. And so you guys too, right? While you're trading and doing things, I always keep an eye, like, what are the stocks that are moving down on earnings, and I like to flip through them and come up with a potential list of stuff that might be in play, days from now, that I can be shorting after it's had its kind of dead cat bounce. And a few of the things that you always want to look for, when you're looking at like an earnings breakdown, you want something really clean. You want something clean that is not going to be jumping down into supports and stuff like that. Like, you don't want to see something like this, because, when you break down, but you just tap into support, it's not a clean move, and so you often don't get that good low risk and high probability type trade. So that's it for now, guys. Let me know if you guys have any questions. Once again, you can email me anytime, or you always find me in our chat room at Bulls on Wall Street. I have this up all day. My trading platform, this TC2000, our charting. I'm just trading live on screen sharing video in front of my students. Feel free to pop by anytime or email me with any questions. It's KUNAL@BULLSON.WS. Take care, guys, and I will see everybody tomorrow. How do you close this thing? Motherfucker. Shift F9.